I think many of the hotels traditionally have had this, for example, somebody at the front desk.
Right.
That really only makes sense if you're looking at the kind of a full service where people expect kind of white glove treatment, right? But the boutique hotel, typically you don't need that. So you can save quite a bit of money by not having front desk at all. You definitely want to list on Airbnb. So for example, this one has these cabins. Cabins are great for Airbnb because people pay a lot more for them than they would for a hotel room. So you want to list those.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Dr. Johannes Urpelainen is a principal at Oasis Equities, a real estate investing company. Johannes, welcome to the show.
Thanks, Sam. It's great to be here.
Absolutely. Johannes, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
I started by making a pretty bad investment here where I live in Arlington, Virginia, in a condo before I had any idea what I was doing. Learned from that mistake, did very well on the passive investing side during the pandemic. And about a year ago, decided to launch my own investment company called Oasis Equities.
That's a really fast 1, 2, 3 step there. Okay, so you owned a condo, that was a complete flop. Then you started doing passive investing, and that did really well for you. You said, you know what, I can do this on my own. What asset class, and what are you working on right now?
I've done some multifamily, so I have a few co-GP positions. We have a 92 unit in Atlanta and a 300 unit in Orlando, Florida. But recently, I've been very focused on hospitality. So I run a few Airbnbs in West Virginia. I'm a co-GP on a new construction in North Carolina for a kind of beach community. And right now I'm working on closing on 3 hotels, 1 in West Virginia and 2 in Arkansas.
Okay, tell me about, I don't know, I'm thinking here on the show, if I had anybody come on and talk about hotels, if we have, it's been hotel conversion projects or something a little bit more off the beaten path, but a straight hotel investment, we've not really talked about a lot here on the show. So give us the mechanics of investing in hotels.
Yeah, so the basic idea is very similar to multifamily. You're looking to buy something where you can buy at a low basis, and then you can add value with renovations, better management, new revenue streams, and all that. The challenges that you face with hotels is seasonality, and the income is more kind of variable, as we saw, for example, during the pandemic. The other issue is that the cap rates are higher. So that means that when you add value, when you renovate, it doesn't translate into quite the same increase in the value as you see in multifamily. But the beauty of hospitality is that there's almost an endless number of things you can do to add value. You can take a highway motel and turn it into a cool boutique hotel and make a lot of money doing that.
Very, very cool. So with the options for investing in hotels, seemingly endless options for investing in hotels, how have you found an effective way to kind of filter through those and find the investments that are right for you?
That is a very good question. I'm myself more on the cash flow side of investing. So I always try to find assets that would do quite well as is. So I don't go for vacant hotels or very heavy value adds. I'm looking for something that's kind of working okay as is, maybe has a cap rate of like 9 or 10 or something, so that I basically pay $10 for $1 of net operating income. And then I do things, I improve the marketing. Many of these hotels are owned by kind of mom and pop operators who don't understand dynamic pricing, who don't understand how to optimize their websites and all that. So that alone can sometimes give you 5 to 10% net operating income by just improving the pricing.
Is there a brand in particular that you hunt for, or that you found to be the right brand to buy inside of? I don't even know necessarily how hotel management works? Is the brand actually just the manager of it, like a property manager? Or how does that whole system inside, how does that work? I have no idea.
Yeah, so there's really two different types. One is the so-called flag hotels. So think of like Hilton or Holiday Inn, Marriott. Those are the ones that are branded. And if you go for those, then you are restricted by their brand guidelines, which can be very strict. So I actually prefer to work with boutique hotels that don't have a flag, because I can do whatever I want with those.
Got it. So a boutique hotel that doesn't have a flag, does that mean that when you go there, you're not necessarily, like, you pull into a town, you're not seeing, what's the name of a hotel you're buying right now? And is it just a name that you guys are giving it, or is it?
Yeah, let me give you one example. So we are about to close on this asset. It's called the Cheat River Lodge. Okay, it's a very simple, small 9 units in a beautiful location. It's been operated by this couple now for 40 years. I think they don't have any kind of branding beyond a very simple website and just a lot of word of mouth. So when we buy it, there's no restrictions. Nobody's going to tell us that you need to have this kind of breakfast and you need to have those kind of linens or anything like that. We can do almost anything we want with that. If I instead went and bought a Hilton, they would have this very long agreement that would say, this is what it has to look like, this is what the pricing has to be like, this is what the services need to be. They're very strict about that.
Got it. Okay. So what's the play? So you got a 9-unit hotel that this couple's owned it for 40 years. I know you mentioned that you like to buy for cash flow, but I would imagine that there's a lot of deferred either maintenance and or, like you said, operational deficiencies in properties like this. So what's the play for you when you buy this 9-unit hotel?
Yeah, so there's a few things to do. One is, of course, we do need to do some renovations. There is deferred maintenance, and there's a few things that are just outdated, right? So we'll replace the flooring, we'll fix a few roofs, things like just a kind of similar thing you would do in a typical multifamily acquisition. Then on top of that, we put in new furniture and some other things like, coffee makers, fridges, maybe a few new air conditioners, things like that. We work with a third-party manager with whom I've worked before, who's very good at this kind of very small hotel management. And then once we stabilize it and once we are cash flowing so that we are not bleeding anymore, hopefully in the next, let's say, 3 to 4 months, then after that, we get creative. So this one comes, for example, with 5 acres of land. So we could do glamping, we could do tiny homes, we could put a pizza shop, we could put a general store there. There's just a lot of different things we can do with this one.
Where does a property, and maybe not to give specific location, but I'm really just thinking outside of the box of a 9-unit hotel, where does something like that do well that you feel comfortable then buying it? I mean, is that are there 9-unit hotels everywhere and I'm just not seeing them? Or can you shed any light on that?
Yeah, first of all, it is difficult because if you have such a small number of units, it's hard to find management. You cannot have kind of like a on-site full-time manager. Everything has to be done on a kind of contract basis. So that's tough. But for example, with this one, it's right on the river. There's a lot of like fishing, there's hunting, there's hiking, there's all kinds of sports activities, outdoor activities, and it's also in a fairly good location. There's a number of cool small towns around it. It's not too far of a drive from Pittsburgh or DC or North Carolina, even if somebody really wants to come to West Virginia. So you just look at these opportunities, and most of them don't make a lot of sense, but every now and then you find something where there's an opportunity to add value and increase the cash flow.
I've heard of people taking small boutique hotels like this and turning them more into Airbnb style, getting rid of the front desk, getting rid of kind of a lot of the ancillary services that don't necessarily generate revenue. Is that part of your strategy?
Yeah, so I think if you think of the management here, I think many of the hotels traditionally have had this, for example, somebody at the front desk.
Right.
That really only makes sense if you're looking at a kind of a full service where people expect kind of white glove treatment, right? But the boutique hotel, typically you don't need that. So you can save quite a bit of money by not having front desk at all. You definitely want to list on Airbnb. So for example, this one has these cabins. Cabins are great for Airbnb because people pay a lot more for them than they would for a hotel room. So you want to list those. But at the same time, it's also funny seeing everybody going from Airbnb to hotels when people start seeing these economies of scale. Because the problem with Airbnb, it's hard to scale. Every asset is different and it's just one asset. So unless it's a complete blockbuster, you're talking about maybe like $50,000, $60,000, $70,000 of gross cash flow. It's very hard to scale that up.
That is awesome. Talking about third-party management of this, how did you locate a third-party manager willing to take on just 9 units? Or I guess 9.
So I had worked in other Airbnb acquisitions with this same guy whom I met through one of my business partners. He's done a good job with the others. He's bringing in good money, and the management is generally almost hands-off for us. Every now and then we need to do some things that the owner needs to do, but generally the performance has been good. So I just asked if he felt he would be able to take this on, and he said, looks doable. He gave us some estimates of how much money he thinks we can make with this. Those were in line with our estimates and what the property has been doing historically, so I feel pretty confident about that.
How do you underwrite these? I mean, I guess, what do you project, if you don't mind sharing kind of, where it is now to where you think you can take a property like this?
Yeah, so the underwriting is surprisingly similar to multifamily. You have all the same things. You have different expenses, you have property management fees, you have gross income. The few things that I think are different, one is the seasonality. So you got to be ready for those slow seasons when you have to have reserves and you might barely break even or even be at a loss. So that's a big one. For something like this, these 9 units, I think right now their gross total is probably something like 150,000. By just improving management, a little bit of renovation, we can probably add another 20 to 25%. And if we then get into this like glamping and other general store mode, we might bring in another 15%. So at that point, we would be well over 200,000, and that would be a pretty good place to be.
Got it. Okay. That's absolutely awesome. I love looking off the beaten path. I mean, the hospitality sector, of course, has done really well the last couple of years. Is there any fear and or contingency plans if we go into a recession or if maybe the cash flows change?
Yeah, so for recession, I'm not too concerned about the recession because in my looking at the data that we have, these more sort of limited service hotels tend to do well even in a recession. They might not do crazy well, but they'll do well enough that we can pay the mortgage and the expenses and all of that. Something like the pandemic, if that happened again, that would be a tough place to be. But I think maybe now that we've seen it once, we have a better idea of how to play it. I wouldn't expect the same kind of uncoordinated a blanket lockdowns. I think we would see something a lot more kind of targeted and sophisticated next time around.
Right. Yeah, absolutely. You have been involved in some really unique investments. I know you and I talked a little bit about a 3D printing opportunity that you're involved in right now. Can you give me some insight on that? We'll kind of turn left out of the hospitality space, maybe a little bit, and talk about this other opportunity that you find compelling.
Absolutely. This was actually a key reason why I went from being just a passive investor to active. So about a year ago, I made a venture capital investment, my only venture capital investment in my life, to this company called Family Communities, which is based in Houston, Texas. And they use 3D printing technology to produce these duplexes that they will then rent out. So it's built to rent, but with this technology that dramatically reduces the cost and the time to develop this. When I made the investment and visited them, the CEO actually asked me to help them. So I joined the company as a consultant. I've been helping them with developing these sites, looking at the markets, doing some underwriting, financing, things like this. And what is cool about this really is that real estate is kind of a legacy industry, right? We don't see too many new innovations, roughly the same as 100 years ago.
Right.
But with 3D printing, that could change, because if we can drive down the cost very significantly and build this a lot faster, we could really start making progress on the housing shortage, which is pretty extreme in the United States today. So I've had a great time working with this company, and that experience kind of gave me the confidence to go and start doing my own joint ventures and syndications.
That's really cool. Kind of a backdoor entrance into the real estate market as a whole. What size of home? How fast can it be produced? What are the major? Obviously, a housing shortage is one of the components that we're trying to solve. But how does this meet many of the problems that we're facing today?
Yeah. So let's say we have a family that's looking for a home and they want a house. They don't want to live in a studio apartment or something like that. Okay. And it's pretty hard to find those today. Just a year ago, they were very expensive. Now they are a bit less expensive, but with 7% interest rates, the bank is not going to give you the money, right? So what we do is we build these 3D printed duplexes, so 2 units in each. They have a yard, and the only common wall is between the garages, right? So there's not really the sense of living next to a neighbor, right? They're more like separated from each other. The size of the unit is about, the smallest one that we have is about 1,300 square foot. So it's like a very small house size. It comes with a full garage where you can actually fit 3 cars. There's a backyard, there's a fence, all the appliances, everything is very top notch. And then you pay rent as if you were living in an apartment complex, but it feels more like single family living, which again, for families in particular, is in very high demand.
So when you say 3D printed, does that mean the walls? Does that mean the roof? What of this is 3D printed, and how does it speed up the process?
Yeah. So of course you need to start with the site work, and that is done as always, the usual leveling the site, the infrastructure, all that. That is what it is. We don't have any major innovations on that. But then when you actually put together the kind of like structure of the house, that is done with the 3D printer in 1 week. Okay. So instead of, weeks and weeks, months of work, you put the structure together in 1 week. And it's designed in a way that everything is kind of ready. The electric is very easy to put in. The plumbing is very easy to put in. You put the roof on it, you put in the flooring, the appliances, and you're basically ready to go. So we can reduce the overall time by months. We can probably reduce it to a half with 3D printing.
Wow, that's wild. What about building codes? I mean, I don't even know the right question to ask on this, but the materials that whatever materials it takes to do 3D printing, how has been getting that incorporated into the local building codes? What's been that process like?
It's a great question. It is a very important issue. Fortunately, Texas is an easier place to do this than many others, because mostly the building codes are pretty easygoing and zoning is not extremely restrictive. What we did for the first site, though this is a very early stage, this is a tech company, right?
Sure.
With the first site is just build a good relationship with this community. It's called Waller. It's northwest of Houston, about an hour's drive on the Houston-Austin highway, which was just opened about a year back, and it's now seeing this massive migration into it because it's a great place to live. And so we just built this relationship. We tell the town council and all the other people that we have this solution here. We can build first dozens and then hundreds of units for you. We can bring in people here. There is a very large factory there with this company Daikin, which is, I think, the largest producer of HVAC equipment in North America. So their biggest site is there. That site alone has 10,000 people working there, and they typically drive 2 hours to work right now. We can reduce that to 30 minutes. So it's very attractive for the community. Think about the tax income they're going to make with this.
Yeah, absolutely. No, that's really, really fascinating. I love out of the box solutions, and this will be a fun one to see as you guys bring it to market and see this kind of catch on. Johannes, it's been a pleasure having you on the show today. I've learned so much from you. I don't know much about either of the things you talked about today, so I got a full education here listening to you talk just about 3D printing, manufactured housing, talking about taking hotels and getting into the hospitality space, how you got involved in that, where you're finding opportunity, bringing property managers on, and how you're turning those, and really just finding unique opportunities here in the commercial real estate space. So thank you for taking the time to come on and share your experience with us today. If our listeners want to get in touch with you, learn more about you, what is the best way to do that?
Yeah, so I would first of all check our website. It's called Oasis Equities, so just oasisequities.com. And easiest way to get in touch with me directly is on LinkedIn. I'm the only Johannes Urpelainen in the world, so I'm pretty easy to find.
Fantastic. Dr. Johannes, certainly appreciate your time today. Thank you so much. We'll talk again soon.
Thanks for having me.